We've recently had earnings from the US banking giant Wells Fargo. The stock's up 60% so far this year. So given good earnings and the strong performance, are there more gains to come? I thought it'd be good to take a look at Wells Fargo. You can see the performance. If we go back about 12 months or so, the stock was trading down around $21. And here we are with it now trading just below 50. We've recently had the latest earnings from Wells Fargo. They've not been without scandal over the years, but clearly investor sentiment over the last 12 months has been pretty positive. So I thought, let's do an update. Let's take a look at the recent news, talk about that, have a look at these earnings, what various analysts are expecting, then come back and take a look at the charts in a bit more detail. Hello, I'm David Jones from Capital.com, and I thought this time around on the Stocks channel, we'd take a look at a big US bank that's recently come out with earnings. It's had a few scandals over the years, but let's do an update and take a look at the stock now and what the outlook is. So we're going to take a look at Wells Fargo. So as usual in this video, I'll talk a bit about the recent news, the earnings. We'll have a look at some of the levels to watch, some of the outlooks. Then we'll jump back onto the platform and take a quick look at the charts. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. And it means we can continue to push out lots of different content on the various stocks that we look at throughout the week. Right, let's get into it and take a look at Wells Fargo in a bit more detail. So what is Wells Fargo? It's a US multinational financial services business, and it's the fourth largest bank in the USA by total assets. So a big name in the banking sector. It has been involved in some scandals over the years, fake account scandals a few years ago. It has cost it billions of dollars in fines. The latest fine it paid, it's agreed to pay $37 million to settle federal claims for overcharging for foreign exchange transactions. So it's not been without scandal, but the company now clearly is looking to put all of this behind it and focus on the future. We had the latest earnings, third quarter earnings came out just last week. Expectations are always really important around earnings. What's the market expected versus what's the company actually delivering? So the expectation, the forecast was for Wells Fargo to make 99 cents per share in the latest quarter. The company comfortably beat that number, coming in at $1.22. So earnings beat expectations this time around. If we look at the price to earnings ratio, because it's had a good year, its price to earnings, PE ratio, is arguably quite high for the sector. Wells Fargo is trading on a PE ratio of around 14. If we compare this to Citigroup, Citigroup's PE is just above 7. JP Morgan's price to earnings ratio is around 10.5. So to some investors, Wells Fargo may look like an expensive stock, but so far this year, it's certainly had momentum. Dividend yield as well, perhaps not as important when it comes to US stocks, but the dividend yield, the income you get for holding the shares is just over 1.5%. And again, that number will have been pushed down this year by the growth that we've seen in the share price. When it comes to analyst outlooks for the stock, analysts do tend to be fairly bullish overall on stocks, but and for Wells Fargo, there's something of a wide range. So more than 20 analysts polled on the stocks. At the high end, over the next 12 months, expectations are for $65 a share. At the low end, around about $45 a share. At the time of recording, the stock is trading around $49. So most analysts still see some upside from where we are at the moment. But this has been a good year. The stock for the year so far in 2021 is up 60%. So that is a massive outperformance, even against a stock market that's risen very strongly. So as usual, we'll take a look at the charts in a second. But let's just take a look at some of the levels to watch. I think that the first, perhaps next upside target would be a run back to the highs for the year. These come in around $51.40, so a couple of dollars higher than where we are now. On the downside, there's been lots of support left on the way up. The latest lows from September coming about $43.25. But as usual, let's put some color on these numbers. Let's take a look at the charts and the technicals in a bit more detail. If we go back 6 years or so, slightly more than 6 years, you can see it's been an underperformer over that period. The stock price did peak as high as $65 in January 2018, then traded as low as almost $20 just under a year ago, November 2020. But we've seen a great bounce back since then, and that's really what I want to focus on. If we put a longer term moving average on the stock, 50-day moving average, clearly with moving averages, when the price moves above the moving average, that's considered a buy signal, like back here in November of last year. Then we had a sell signal following that buy signal. That came in June of this year. Since then, the stock's been a bit sideways. Sideways markets and moving averages don't work very well. So we have lots of sort of buy and sell signals as the stock and the moving average are flipping around. The latest signal we had was a buy signal just a few days ago, with the stock moving through $47. So positive in the short to medium term from a moving average point of view. But let's take a look at some of the hurdles in a second. Looking at the RSI down here, the RSI, considering the stock has rallied by about 10% over the last week, the RSI is overbought, not overbought just yet, but heading towards overbought. It's trading around 65% the RSI. So again, suggesting perhaps we're going to get to an extreme in the next couple of days. But for me, what's important is the price action here. And if we take a look at how it's been trading, I mean, since June of this year, so over the last, 4 months or so, we've seen a sort of a sideways range, a fairly broad sideways range, but a sideways range nonetheless. Lots of support on the downside, running from about $41.50 to those most recent lows at the end of August, ahead of 43. So a good area of support there if we were to see the stock break down from here. On the upside, I think the hurdle is the highs for the year so far, set in August, coming in just above $51. If we saw that level get broken, then for me, the next obvious target is a run back up to the November 2019 highs. They're only coming in around $55, so not a million miles away from where we are now. So it's an interesting one to watch, I think. Somewhat sideways over the last 4 months. I think those who are looking at charts would see any weakness back to the low 40s as a buying opportunity. Clearly, it's been a great year for the stock. I think if it can break through those highs at $51.30, around about there, we could see another burst of momentum. So interesting to see how it ends the year after a solid performance for 2021 so far. That's it for the update for Wells Fargo after the earnings. Perhaps a muted reaction by the stock market after those better than expected earnings, but it has been a good year. Let's see if it can continue to push higher from here. We'll come back, we'll do an update. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your investing. For more trading videos just like this, please subscribe to our channel.